Hey fellow traders, if this is your first video, welcome to the channel. Make sure you subscribe, like, and hit the bell for the notifications and all. I'm going to be releasing quite a few videos pretty regular, so you make sure you want to catch all of those. But in this video, I've got quite a radical idea, but I think once you see the results of it and why it's being done this way, I think it might actually help quite a few traders. Now, one of the bases behind the idea is basically when we first started trading, we started trading with no stop loss, and I've actually been noticing a few other traders talking about trading with no stop loss, but there's actually a catch to that. And if we put two and two together with it, I've actually come up with an idea that does kind of produce a little bit better results. So let's first take a look at what we have as a basic way of trading, and that's where you just use a standard stop loss. You're going to try to do a trade like this. So like maybe, you're looking at the overall picture of things on the hourly and you're thinking, all right, this has been in a downtrend. If we look at this, we've got mostly a downward push, and you're looking for a strong breakout and drop back down to this level maybe here that you have picked out from before. It's a little bit far away, but we expect that the level should be pretty close to that. So we've got the target set on the level and we're just going to basically watch it. But if, for example, uh, we were to go and take this as a normal trade and lose this, if we were looking to risk, say, $10 for this trade, we would be trading with a 0.03. That would be about a little over $9 or so in risk. I've actually got a calculator handy so that we can look at it. So if we were looking at that stop there, it'd be $9.57 in risk. We're looking at a 265 reward ratio. So for that, we're going to be looking at roughly $25.36 if we win this trade. We'll be out $9.57, almost 1% of our account if we were to lose this trade. So that is all well within plan, all normal. But the way I'm actually proposing to actually look at things is to actually use a larger stop size, but never intend to actually hit the stop loss. And this is kind of what a lot of traders may get hung up on, is this very detail right here. But the whole purpose of why we want to set up in a new way with our larger stop loss, yes, we're trading with a smaller size, we're risking the same amount, but by never intending to hit that stop loss, we can actually lose a lot less, which means later on in the next trade, we have much less to make up for. And therefore, it makes it much easier to be profitable. And I'll show you an example here in TradingView of how that would work out. So we've got our original idea. We're looking at this maybe being a little bit of a demand zone. So price, worst case, should not cross back over here. We've got a strong break, and we think it's just going to keep continuing from that point because of what we're seeing. So we're going to take that trade and take that target as usual. And now I'm going to use the replay tool on TradingView to do pretty much the same thing. But we're going to use the modified idea, which leaves us with using basically 1.01 or 1,000 units in order to get that same amount of risk. And then we're going to set our stop loss at about $9.90 pips or so. Probably a little bit. It's probably actually different than that because we're trading the CAD, but this will work the same on pretty much any other pair. I just kind of went with what I had pulled up here to kind of look at things. So if we go ahead and play that forward, we'll start moving. So right now we're starting to get it right. And then maybe we got just barely tapped out. on the original idea. So now we're down $9, but look, our idea is still valid. Even though it broke through that point, the idea is still valid. So the original trade that we took is still on. And at this point, if we feel like we're seeing these wicks and it might go up, we can now close it here and we only lost 18 cents. Where in this example, we lost $9. So if we close it right there, our account did not change. Where in this example, we got it completely wrong, lost $9, and now price came back to where we could get it and close out for next to nothing. So that is one way to definitely control your losses. And at this point, you could apply that same logic to flip your position and immediately go long. If it goes against you, same idea applies. You just wait for a pullback, close out the loss at a much lower rate than what you would have taken had the stop loss been hit down here. And you can actually save your losses in the long run. And even though it seems like because you're trading with a smaller size, you're going to be making less, the whole idea is you're going to be cutting your losses to almost next to nothing, and all of your gains will be actual gains and not recovery trades. So you will spend much less time recovering and more time just bringing in profits and controlling your account much tighter. So that is something to kind of practice with. And if we go ahead and look, we still could have potentially won that trade or even come close to it and got a good bit out of it and could have hit it a few other times. So that's just one example of how it could have worked out in our favor, but yet we lost the trade anyway. So that's one way to keep on top of things. Like I said, we could have even held that and we might have made about roughly $8 to $10, but we made money here in that example if we held on instead of getting tapped out. And in the example, we were getting iffy because we were seeing volatility, so on and so forth. We saw the wicks, so we'll just close it out at even and take nothing. So that is one little secret, one little tip that might actually help you out in the long run and start to turn your account around. And that's going to do it for this one. This will be a real short video, so I'll wrap it up there. Like I say, I appreciate all the support to everybody that's been watching so far, and make sure you stay up with the challenge. Just check back. Subscribe, hit those bells, and leave some comments. If there's anything you want to see, anything you'd like to discuss, I'm going to be doing pretty regular videos with kind of like a over-the-shoulder style videos, and we'll try to do some of those live here coming up soon. That way we can get uh, basically a little bit more interaction between me and you guys, and start talking about some different ideas, because a lot of times some of the ideas I get come from the comments, and I love to do math, so I'm going to run numbers on things. I'm going to definitely test things. I love to back test and really just kind of understand the flow of the market. So if there's anything you want to know, just leave a note. Let me try to get that answered for you. But I'll catch you on the next video.